Okay, let's welcome on board Deven Choksey as well and talk about what he's making of the market texture right now. Deven, out of the two names we just discussed, ITC as well as Sun TV, any favorites there? ITC, of course, has been the biggest underperformer within the FMCG basket. The large cap giant has finally begun to move now.
Good morning. Well, I think ITC definitely remains, favorable pick as far as investment opportunity goes. However, I think the important aspect, and Nikunj summarized it very well. According to me, the important aspect is if you want to attract new funds coming into the businesses of ITC, probably I think the requirement here would be to demerge FMCG business, particularly I think into a separate company, and make the structure as a holding company for ITC's current business, and basically I think separate it out. I think different companies. If that does happen, then in my viewpoint, I think the interest of investors would come into it. At the same time, I think the business would start moving in the right direction as far as I think the capitalization process goes. So from the point of view of looking at investment, yes, I think there is an opportunity therein. However, the restructuring part will have to be carried out here, I suppose.
Yeah. Kunal, wanted to get your thoughts in on what's happening within Glenmark Pharma. Has been one of the last movers within the pharma space, and yesterday as well, a solid 6% move here.
The stock did pretty well for itself. Friday, we saw the pharma stocks doing pretty well. We saw Glenmark Pharma also moving up, about that 500 mark. 500 has been a sort of a resistance for Glenmark Pharma. So I was looking at the data on Friday, and I was expecting the pharma pickup or the pharma rally to pick up for a couple of these names. Now, what transpired yesterday was a huge build-up of open interest. There was almost a 25 or a 26% build-up of open interest for Glenmark Pharma, which is substantial because you're not just looking at the stock breaking out above that 500 mark. You're looking at a very strong set of participation from the F&O side as well. So I believe on that aspect, on the built up of open interest, on the steady chart patterns, breakout above that 500 mark. One thing is certain that the stock has now found very good support at that 490 500 zone. So I think that could now be a very good medium term support, and keeping that as a sort of a positional stop loss. I think traders and investors should continue to hold on Glenmark Pharma. I for one believe that the stock should be heading towards a 580 600 over the next couple of weeks, or at least over the next 1 or 2 months. So I think Glenmark Pharma is now a positional buy, given the kind of strong built up on the open interest as well as on the volume and the price fronts.
Data in the morning that how some of the so-called underperformers or disbelievers have made a comeback. Sale from 31st of October, Naresh, is up 60%. IndusInd Bank is up 60%. SBI is up 40%. Tata Motor is up 40%. Which is the next one, Naresh, according to you, which belongs to the Laggard club, which now could be joining the party?
So in the PSU names, that would be BHEL. BHEL has been a rank underperformer for a long time. In the short term, we've made a good base. And say on a very longer term chart, we are seeing a big breakout about 35-40 zones. So that could be the biggest surprise in the whole pack in the PSU names. So I would go with BHEL as a big reversal, and Nifty Media, which is on verge of a breakout. So Media and say BHEL. So that would be the choices. So BHEL has been one performer which has been in a downward trend almost forever, it seems. But technically, we are seeing first signs of a major turnaround. And say we call it as a major rounding bottom formation happening in the near term. So it could be one of the biggest surprise in terms of say percentage moves going forward.
Fair point. Deven, what is your house advice? Prepare your portfolio by raising 10-15% cash, or enjoy the joyride?
Well, Nikunj, I think there is no particular way in which I think one could generalize this answer, I think, to the question that you raised. But I think what we are doing is that wherever we see the valuation speaking out, we are at least partly booking profits and staying on cash. This is important theory, because I think the way in which I think the current format of the market is, it is largely driven by the liquidity. Additional funds keeps on coming into the market, one after another sectors in rotation. they would keep changing the preference. And as a result of which, I think you would find the opportunities stroke, I think the upside into different stocks. So unless you book some profit, generate cash, sit on it, and probably find the opportunity for the next move that one gets, I think you will not be able to capitalize the move in this market. We typically follow 70-30 norm here. 70% of the portfolio stays in the investment, 30% of the portfolio we try and play around with, I think, profit booking and re-enter into the stock when the opportunity comes next. So this is how I think we play around, but it cannot be generalized across the portfolio. It is very specific depending on, I think, how the valuation look like in the individual companies. But profit booking is a must in current environment, as I see.